Have you ever wondered why your credit scores are different depending on where you look? One lender pulls your credit and says your score is an 800. Another lender pulls it and says it's a 780. What's the deal? Are these companies just making it up? Is one of them wrong? The answer is, it's complicated. And it all comes down to the three major credit bureaus, Experian, TransUnion, and Equifax. They're the gatekeepers of your financial reputation, but they're not all the same. And while they all do the same basic job, the way they do it and what they offer can vary in some pretty significant ways. Today, we're diving deep into one of the big three to answer the question, how is Equifax different from the other credit bureaus? Let's start with the basics. Equifax, Experian, and TransUnion are the three big credit reporting agencies in the United States. Their primary function is to collect financial data from lenders, creditors, and other sources, and then compile that data into a consumer credit report. This report is basically a detailed history of your credit activity, including things like your payment history, how much debt you have, and how long your accounts have been open. Lenders then use this information to determine your creditworthiness when you apply for a loan, a credit card, or even a rental apartment. The crucial thing to understand is that these three bureaus are separate, independent companies. They don't share information with each other. This is the single biggest reason why your credit report and your credit score can vary from one bureau to the next. A credit card company might report your payment history to Equifax and Experian, but not to TransUnion. A car loan lender might report to all three. It's entirely up to the individual company. So, the first and most fundamental difference is simply the data that each bureau has on you. It's a bit like three different journalists covering the same event. They'll all have their own sources and their own unique version of the story. So, what about Equifax specifically? What makes it stand out? Well, for one, let's talk about the data itself. Equifax has a long and storied history, founded all the way back in 1899 as the retail credit company. Over the decades, it evolved, and today, it has a significant focus on providing a wide range of data-driven solutions beyond just consumer credit. Equifax is a huge player in the business-to-business space, offering insights and analytics to a variety of industries, including telecommunications, utilities, and even government agencies. This gives them a slightly different lens on data than their competitors. They even have a specific database called the National Consumer Telecom and Utilities Exchange, or NCTUE, which collects data on how you pay your phone and utility bills. This is a unique source of information that might not be on your reports from Experian or TransUnion, and it can be a big deal, especially if you have a thin credit file. Beyond just the data, Equifax also has some unique features in how they present and manage their credit reports. When you get an Equifax credit report, you'll notice it has a clear section for accounts that are open versus those that are closed. This can make it easier to get a quick snapshot of your current financial situation. It also provides a robust 81-month credit history, which is just over 7 years, giving you a detailed look at your past financial behavior. Now, all bureaus have to report information for a certain period under the Fair Credit Reporting Act, but Equifax's specific presentation is one of its small but notable differences. Another key differentiator is in the credit scores they provide. Now, this is a part that causes a lot of confusion. The credit bureaus don't actually create the most popular credit scores, like FICO or VantageScore. Those are separate companies that license their scoring models to the bureaus. However, each bureau can offer its own unique educational credit score to consumers. Equifax, for example, offers a score that's intended to give you a general idea of your credit position. This educational score is not the same as the FICO score or VantageScore that a lender might use, which is another reason for the variations you see. Equifax also offers a product called Equifax Lock and Alert, which allows you to quickly lock and unlock your Equifax credit report from a mobile app. While the other bureaus have similar features, the ease of use and specific functionality of Equifax's offering can be a point of distinction for some consumers. Of course, no discussion of Equifax would be complete without mentioning the elephant in the room, the 2017 data breach. This was a monumental event that exposed the personal information of nearly 150 million Americans. While this was a massive security failure and a blackout for the company, it also forced Equifax and the entire industry to reevaluate and strengthen its security protocols. For consumers, this event led to new rights and tools, like the ability to freeze and unfreeze your credit report for free. In the wake of the breach, Equifax has invested heavily in its security and now offers more robust identity theft protection services, including monitoring and insurance, which are often bundled into their premium products. So, to recap the key differences. First, data reporting. Not all lenders report to all three bureaus, so each bureau's credit report is a unique snapshot of your financial life. Second, unique data sources. Equifax, with its ties to telecommunications and utilities, might have information on your report that the others don't. Third, report presentation. The way Equifax organizes and presents its reports, like the clear separation of open and closed accounts, is a small but helpful distinction. Fourth, scoring. While all three use FICO and VantageScore models, the educational scores and other tools they offer to consumers can vary. And finally, their unique history and security enhancements. The 2017 breach, while a huge negative, did lead to Equifax significantly overhauling its security offerings and consumer protections. The takeaway from all of this is not that one bureau is better or worse than the others. The reality is that all three are vital pieces of your financial identity. The most financially savvy move you can make is to understand that they are different and to monitor all three of your reports. You can get a free copy of your credit report from each of the three bureaus once a week through annualcreditreport.com. Checking them regularly is the only way to ensure the information on all of them is accurate and to catch any signs of fraud or identity theft. With that said, thanks for watching and until next time.